I want to start off. I want to put the ball in your court. You're posting a lot about things. You put out a YouTube episode talking about something specifically, which we'll do at the end. I'll encourage everybody to go follow Dario's YouTube channel. But what is most on your mind right now in terms of economic, global? What's the first thing that pops into your brain?
Oof. Actually, I think there are so many things in my mind that the thoughts in my brain just clashed among each other. But no, the first thing on top of my mind, like right now, eventually there are two things. The first one that everyone it's pretty waiting for it are Nvidia results that are for you guys like there in US is gonna be tomorrow. Here I'm based in Asia, so it's already like my day here on Wednesday after market close. And this is going to be a pretty big deal. The second pretty important thing in my mind, like right now, is what's happening in Japan. And hilariously, it's such an important thing that for whatever reason, I struggle to understand doesn't get enough attention in Europe or in US media and so on, despite how important it is for markets.
So let's go backwards here and start with the second thing you said because I was at the grocery store earlier today, and people that know about my show they'll ask me questions about the state of things, and the question that people were asking me, Dario, was about Epstein and Trump, and I said, I'm not look at I want the Epstein list to come out like everybody else, but we've been through this before here in America. Whatever they put out, it's going to be a limited hangout. Probably the same thing that they've been putting out. They've put out they put out earlier this year. So I'm not focusing on that. And when they asked me, okay, what are you looking at? I said, well, ironically, I'm talking to somebody today about Japan and the carry trade. And so people will ask me, what is that? So if you don't mind, you know, providing a top level, explaining it to somebody like they're 5 years old, why is Japan so important to you right now? And why should it be important to everybody else?
Okay, so Japan, let me try to explain like a 5 years old, see if I can do a good job,
And that's for me,
visual
Dario. I'm the
explanation.
5 year old here. So not my audience. I don't want to disrespect my audience. It's for me.
It's a good challenge because usually I tend to be like too technical and complicated, but I love the exercise. So Japan, the problem with the carry trade, it goes back actually many years when Japan was basically a rising star economy and like in the 80s and everyone thought that Japan would have taken over the world. So just to give an idea of the level of inflation and speculation at that time there, the land upon which the imperial palace in Tokyo is built was worth more than the entire land of the state of California. So that should give a good idea of the magnitude of the bubble out there. This is a real estate example, but it was going across the board, like in stocks, like financial institution, banks, and so on. So when this bubble burst, it was like a colossal damage, and the way that the country decided to move forward was like virtually speaking, not let anybody fail. Okay, this is a bit of a countersense, okay? Because in that case, you should allow company to fail and the economy to cleanse. So in order not to allow anybody to fail, so to keep like high level of unemployment, even if it would have come an incredible economic cost, they started to effectively print money and put it in people's and companies' pockets. But now you wonder how much money do you need to print in order to lift things back up? Okay. So these people have been doing this for over 30 years with zero results. And the ultimate explanation for this is that eventually the money that was supposed to be printed and stay in Japan to help Japan recover ended up being invested in foreign economies because it's a better investment opportunity. It's a very basic concept. I know people can talk about derivatives, trades, and whatever, but the truth is that you know the other economies look more promising, and people in Japan they only saw despair, and they saw a lot of like slack over supply. So they simply like this money started to go abroad, and here there is a very simple concept like when your currency is very stable towards another currency, and in this case, we have the US dollar, okay? And there is a big differential in returns in the economies. So in Japan, interest rates were at zero. But along with interest rates at zero, a lot of things were close to zero, like economic return, corporate returns, and so on, like margins very low and whatever. So, and on the other side, you had everything growing like a 3, 4, 5, 6, 7% and whatever. It it's a no-brainer. You take that money and you invest abroad, and you borrow that money, you invest abroad, you pocket the gap, and you're fine. And this literally went on for like decades. Of course, small at the beginning, but like the bigger, bigger, and bigger to the point that currently it is estimated that, well, no one knows exactly how much is the size, but it depends whether you consider outright carry trade or derivatives involved or whatever. We might talking about something between 2 and 10 trillion dollars here. So this is the scale of this carry trade. And why is important in particular for European and especially in the US is because you don't like it's not like a Japanese person goes with a bag of cash, takes the plane, goes to California, New York, or whatever, and buys a piece of real estate or whatever. Yeah, in reality, this carry trade has been exploited significantly by foreign banks and traders. So you had like investment banks in Wall Street looking at Japan and say, well, we can borrow so cheaply. Come here, we do what we do, we spin it around. We have effectively like free leverage at no risk on that front, and we can get great returns in using that. There is a problem with that, and everything was honky dory for decades simply because Japan was at the rock bottom, and people were I keep asking themselves, oh, why the Bank of Japan is giving so much money to the economy and the economy doesn't recover? I mean, and no one was asking the question, what, is the money really staying there? I mean, right? Plus, there is a little bit higher level of complication in Japan that because of you know an industrial and economic surplus that was also going on at the same time because Japan still had an industrial structure, they were able to accumulate like foreign reserves. So there was a lot of this confusion that they were seeing like the Japan economy not going anywhere. But then you look at the currency surplus and the trade surplus and the accumulation of foreign reserves, and people really couldn't put these things together. So to conclude here, these things was perfect for years where everything was going up elsewhere and not going anywhere in Japan, basically. Small problem is now like when you take debts to invest in assets,
When you take what?
And
I'm sorry, Dario. Say that again. When you take
when you
what?
take debt, when you borrow debt to invest in assets, and the value of these assets goes down, while the value of the debt that you have to repay goes up, well, then you have a serious problem. And that, in a nutshell, is exactly what's happening right now.
So what happened last year? Didn't this come up last year where it was last summer, I believe, where they were talking about the carry trade in Japan?
Yeah, yeah, yeah. That's a very interesting case actually, because I was warning about that for so long,
When did
and
you,
then
Dario, let me interrupt you. When did you get a sense of what was going on here? How long ago?
oh, I mean, I've been writing about Japan since I have memory. Um, frankly, things started to escalate recently when the whole structure upon which the global financial system is built started to effectively turn upside down to a certain extent. And the reason why it started to turn upside down is when inflation began to show up in Japan. And to give you an idea of how incredible is that, I mean, companies in Japan producing groceries, like goods, and selling stuff, they have not been hiking prices for 40 years or something. And there is this famous YouTube video of a company that even apologized for raising prices. So inflation started to creep up in Japan. And what prompted me to see that things were turning bad, and here we become a bit complex, but I'll try to simplify as much as possible. It's actually Turkey. Turkey is like, no one talks about Turkey, like zero. I mean, someone talks about Japan. No one talks about Turkey, like at all. But people don't realize that Turkey is G20 company. It is in an incredible strategic position. For a while was, well, still is. Personally, I'm not a big expert of geopolitics, but are they like US allied, Russian allied? You don't get it very well exactly what's going on there. But the Turkish economy was like roaring. Okay. Why it was roaring? Because after, you know, US was kind of plateauing, Europe was kind of plateauing, Middle East never really took off, and then they have so much money there that they buy everything themselves. You as a foreign investor, you don't do anything. There was Turkey, and money started to pour into Turkey, and what happened there? It's the extreme, because inflation at some point was like almost 100%. I mean, I'm not kidding. Like right now, it's like still I think 35-40%. I mean, if you look at I was remembering like the US dollar Turkish lira exchange rate was at 8 at that time. And everyone was saying, oh, so undervalued. There's a massive opportunity. Like, go long. I'm like, you guys don't understand what's happening here. And here is a critical point that I've been talking about for years, that people don't get it. People were like, oh, they're gonna hike interest rates. They deal with this inflation problem. Their currency will strengthen a lot. Right now, the dollar Turkish lira exchange rate is at 42. So it's not like at 9 or 10, it's at 42. So the Turkish lira, basically they don't have currency anymore. Like in Turkey, when you go to the airport in Istanbul or whatever, and you want to buy something, the prices are in euro and dollar. Like if they quote, so they have like a real time changes for the Turkish lira and stuff. That is quite incredible. What is important about Japan? What people don't get it still is when you are in a highly levered system where the money supply is growing bigger and bigger, the bigger it grows, the less control the central bank starts getting over the various lever that govern it. And especially when you have such a huge amount of debt and inflation starts creeping up in your economy, what happens, right? You start to have pressure on the front to hike rates. And if you don't hike rates like Japan waited for so long to do it, they waited beyond the end of the rate hike cycle everywhere else in the world to do something. But the reason why they waited, and it's not really due to Japan, it's actually due to the carry trade. But we'll come back to this later. What it's important to understand is that when you have inflation and you have investment, effectively the real return of your investments starts to become negative, right? So all this money that was lent by Japanese for the carry trade to go abroad, because there are always two sides, two faces of the coin. That is the lender, the borrower, the investor, and so on. It's a chain. That's also why it's not very straightforward to understand. So this money that was lent, people, in order to carry on with this, they want higher returns. Okay? But there is an issue. When you have all this amount of money starting to, so imagine all this money that went abroad. Okay? And then because of COVID and what happened, because the rate hike cycle abroad, all the fixed income investment and whatever was starting to bleed a lot and the economies were plateaued, then people, what do? They cash out, they repay the debt, the money comes back, so they start having inflation. So what happened to Turkey is exactly what happened to Japan, like at a scale like 100 times higher. Basically, you enter in a feedback loop because the inflation goes higher and higher. By the way, in Japan is much higher than what they report. That's another item nowadays that is completely unbelievable, like the completely fake statistic out there. But then because the government needs to monetize its debt to carry on, right? So you have the debt monetization, you have inflation, and then you have interest rates rising. Because interest rates are rising, you need to print even more debt, even more currency to repay the debt. But that creates even more currency that gets stuck in a compressed economy. And then, you know, it's basically a circle that creates a spiral. And that's the problem in Japan. If you read my article from 1 year ago, 2 years ago, and so on, like 1 year ago, I literally said Japan, US dollar to Japan FX rate is bound to go to 300. And I remember like the first time when I was like, the currency was around like 110, 120, and people were like, oh, like US now is gonna this is gonna go back to 90. All the Wall Street banks are like, oh, it's so undervalued. I'm like, this is going to 150, 160. You guys do not understand. And I mean, it's all in the articles there. So now people see the currency devaluating and the interest rates rising, and they don't get it. They're like completely lost. They're like, how is this possible? I mean, that's because there is this nasty, vicious circle that trigger when there is too much sorry, money supply, interest rate economy that triggers hyperinflating dynamics. And that's where Japan is right now. So you have this happening on one side. Basically, the cost of this carry trade is going higher and higher. Okay. And on the other side of the ocean, because interest rates are high and what's happening with the commercial real estate, with the residential real estate, and so on. Because most of the carry trade, I mean, it's not invested in stocks. Stocks, people talk a lot about them, but in reality, it's a small market. Like bonds and debt is 10, 20 times larger than stocks. FX is the FX market is 100 times larger, and so on. So not every so the lion's share of this is invested in fixed income assets. So the fixed income assets are underwater, and the cost of debt is rising.